Tesla stock fell 49% from its all-time high today. At one point, Tesla was down 3%. At the time of recording this video, you're down about 0.2%. You are flirting with being positive today. And you've really given all of your election gain back. You've filled the gap on Tesla. You're bouncing here today at this trend line that I've had drawn on the charts for a while now. This is probably a short-term bottom for Tesla. As Dan Ives says, this is a generational buying opportunity for Tesla. And years down the line, well, you're going to regret not buying at these prices. Here in this video, I will share with you all of your breaking news, specifically for Tesla, what the hedge funds and institutions are doing with their option positions, as well as the short activity around Tesla. I will also give you the major headlines of the day today, including new threats of tariffs from Trump. What's new there? A bunch of Fed speakers, including Fed Jerome Powell, and how that kind of boosted markets today and kind of killed the bond market, which we've seen this inverse correlation. Bonds were doing really good for the first half of the day today, putting pressure on stocks, and the S&P was down over 1% at one point today, now positive, and you've seen that inverse. So bonds have started to die, and stocks have started to do better. And there's actually a lot of people on X today as well calling for a short-term bounce. And when you get a lot of people together that all believe the same thing, well, that can be a powerful driving force for a stock. So let's start with your breaking news today. Dan Ives said this on CNBC about Tesla, quote, "This sell-off is an opportunity. Years from now, this is going to be a generational opportunity. Based on our survey work, we think that less than 5% of Tesla owners will think twice from a brand perspective because of Musk. From talking to people at Tesla, I actually think he's driving a lot of the bigger initiatives at Tesla, despite the view that he's 110% into Doge." So basically saying Elon's still in control of operations. He's still making the decisions. He is still effectively the CEO. Take a listen to this.
To some extent, I think this sell-off is going to be an opportunity. I think years from now, it's a generational opportunity. Because it's my view, I get, in terms of all the frustration, noise, the Doge, the distractions, the brand issues, even some of the sales numbers that we've seen in Europe, China, I think it's going to be short-lived. I mean, my view is they have probably from a technology perspective, in terms of autonomous, in terms of the lower-cost vehicle, and where I see things over the next 12 to 18 months, I think they're actually going to go in to their biggest part of their technology cycle that they've had, maybe forever, maybe in the last decade.
Does that require Elon to distance himself from the brand or recommit himself to the brand?
Look, I think this is one where I continue to believe the bet for the ages was Musk's bet on Trump. Because of autonomous, deregulatory, and I believe autonomous is worth ultimately $1 trillion alone to the ultimate story. From a brand perspective, look, we think about 10 to 15% of maybe the sales decline is related to some of the brand issues. But based on all of our survey work, we think only about less than 5% of Tesla holders today, so Tesla owners, will ultimately think twice, potentially, from a brand perspective because of Musk. So that's still pretty limited relative to where I view actually the whole growth opportunity.
What about the whole distraction? I mean, he's always had a lot of jobs and a lot of CEO roles, and so this has always been a constant question. But now that he's spending so much time in Washington with the president, working on Doge, does that make you wonder about his running it?
Yeah, look, we went through similar things when it came to Twitter X. I mean, we've gone through other situations as we've talked about. I believe this is something where 3-6 months from now, I think you'll see him a lot more dialed into Tesla in terms of as we go into FSD, as we go into autonomous. I also think, perception's reality, and I get that, but from all the work that we've done talking to people at Tesla, I actually think he is driving a lot of the bigger initiatives at Tesla, despite the view that he's basically 110% into Doge, and that's where all of his time is.
Where do you come up with this 5% number? I only ask that in terms of people who might change?
Yeah.
Because, typically, I think it's fair to say his customer has been sort of center left, let's say.
Sure.
They've been environmentally focused. Republicans, perhaps not as much so, at least in certain parts, and so less likely to buy one. I don't know. The Journal today, the story, they cite a lot of people. It's anecdotal, saying, I'm going to give it up at the end of the lease. Where do you come up with 5%?
Yeah, for us, 1,000 Tesla owners, it's less than 5%.
So you did a survey of 1,000
so to me, of 1,000 customers, less. And I could also tell you, this is something, as I've talked to others at dealerships, whether it's in Europe, what we've seen even in China, and what I believe we're going to see in the U.S., I get the brand worth. It is a dark time right now for Tesla bulls. But to me, it is not the time to head for the hills. This is actually the time to double down. The reason we add to the top picks list, I think we look out 6, 12 months from now. I think this is ultimately, the stock is a double.
Right.
Over the next
not on cars, though, right? Is it on Optimus? What's it on?
I think 90% of the value is going to be autonomous and Optimus driven. I think autonomous itself is worth more value than all of Tesla today. And I just think as we've gone through many periods, despite the frustration over the years, that has always been the opportunity. And I just think right now we are going into what could be actually the biggest golden path for Musk and Tesla, despite right now what feels like a white knuckle moment, just bad news after bad news.
You're right, there have been those.
So Dan Ives actually says it's time to double down on Tesla. Wedbush analyst Dan Ives added Tesla to his best ideas list and reiterated an outperform rating and a $550 price target today. These price targets are 12 months. So he's saying you're going to double your money in the next 12 months. I don't know about you guys, but that sounds good to me. Okay. I think you want to be positioned in Tesla to the extent you're not going to kick yourself if this thing does double in 12 months. Okay. If you have 10 shares and you're like, well, 12 months from now, I'm not going to be too happy with that. I would have wanted more. Then I think it's time to buy more. Now, I'm not a financial advisor, I'm not a financial planner, but there is a lot of bad news priced into Tesla. That's a fact. And I even think some options start to look attractive as Tesla is in the 260s. And we'll talk about that a little bit more in the next video. Now, you can also see via this video here, at Fremont, it looks like there is a lot of new Model Ys that are cranking out. So again, this is part of what I just explained. You will start to see better delivery numbers coming out for Tesla as production continues to ramp up. And there's going to be issues with production. There always is. Tesla will fix them. Tesla will get back to the same, level of output that they were at before. And that's when the stock will really start to recover as people understand that the fears, they were overblown from the start. Now, it's also being reported buyers in Australia who purchase a new Tesla Model Y long range or a Model 3 from Tesla's inventory will now receive a free universal mobile connector charger and 5,000 kilometers of supercharging credits. And Tesla's AI chatbot now uses vehicle data for personalized respondents. You can ask such questions as, quote, what alerts were recently triggered on my vehicle? Or is my tire pressure low? Which is pretty cool. Senator Kennedy says Elon Musk is a quote unquote rock star. Which, for everyone that talks about brand destruction for Tesla, that people are, protesting against Elon, what about the right side of this country, right? The more conservatives that may be looking at a Tesla where they otherwise wouldn't have been, either because of lack of information or to support Musk. I mean, that is something you also have to throw into the equation, although we can't quantify, how impactful that actually is. And again, another reiteration of news that we got a couple of weeks ago. It says Tesla reportedly received 200,000 orders for the Model Y in China. And look at that, TD Cowen upgraded Tesla to buy with a price target of $388 from $180. Seems like they know something that a lot of other folks on Wall Street just have not figured out yet. And I would argue it's probably the things that we talk about here on this channel, that this is not the end of Tesla's dominance in EVs, that deliveries are only down temporarily. Option activity for Tesla stock today from hedge funds and institutions, not nearly as good as what we've seen recently. You have 624 different trades totaling $550 million with a positive order value of 14%. So definitely on the low side, but again, a lot of that option activity seems to come in the last hour or so of trading. So stay tuned for an update later today. But look at this, 1.53 million shares today are being covered on net today. That's an insane number. Now, Tesla's short interest already is sitting at pretty much the lows of ever. It's never been this low before. And now you have another 1.5 million shares being covered. People do not want to be exposed to an upside move in Tesla. I think that's a pretty clear sign that a lot of hedge funds think the bottom could be in as well. And Google Trends data for Tesla is remarkably stable. There's really not too much to add to this. I believe the numbers are exactly the same as they were a couple days ago. Cybertruck at 14, Model Y at 12, Model 3 at 10, Model S at 5, Model X at 4. They are low, kind of, relative to where you have been in the past year. But for this time of the year, it's, I mean, right on par with what you'd expect to see. With like last year around this time, Model Y at 12. Today, Model Y at 12. Model 3 at 11. Today, the Model 3 is at 10. Model S in this time last year was at 4. Model X at 4. Today, the Model S is at 5, and the Model X is at 4. Like, this is around the same, trends that you had a year ago in this same time. So it's not usually a great period for Tesla, and you're not really being reflected that in the data here. And we do have a development in regards to advertising. Tesla is now only running 3,000 different ads, which makes you wonder if demand is picking up for Tesla, because they are now running less ads. At the peak, they were running almost 6,000 ads. It looks like they've cut that number in half in recent months. And even in the prior video, they were running 4,000 ads. So they've reduced how much they are advertising. Typically, companies do that when they don't need to advertise as much, when they are having no issues selling through the vehicles that they are producing. Now, inventory numbers for Tesla, for the Model Y, increasing a little bit to about 5,700. Model 3 at 4,000. Model X at 1,800. Model S at 1,400. And the Cybertruck at about 1,000. Now, let's get into your biggest headlines of the day, what moved broader markets, and your massive economic data that came out this morning. First and foremost, I was a little concerned about the jobs numbers that we were going to get. Now, I don't know how the jobs came in this strong. It's actually incredible. Some of it just doesn't make too much sense. Like government payrolls increased 11,000. We were expecting negative 20,000. To me, that doesn't make much sense with the people that were laid off. So I don't know how big the lag is in this data. It really makes you wonder if the next couple of months could be weaker from that perspective. Now, last month's non-farm payrolls was 143,000. It was revised down to 125,000. We were expecting 160,000 jobs for the report this morning. We came in at 151,000 jobs. This was kind of the sweet spot. Not too strong, but not too weak, right? You didn't want to see either of those outcomes. You didn't want to see a 300,000 jobs report, and you didn't want to see a negative jobs report. So I think this is kind of Goldilocks for markets right now. The unemployment rate did tick up to 4.1%, which is interesting because most people expected this to stay at 4%, even a lot of Fed officials. So unemployment rate is starting to rise, and this is the thing that could get the Fed to react in the coming months as it does move higher. So again, kind of Goldilocks, nothing too far out of the range of expectations, I would say. You had a bunch of Fed speakers as well today. Fed Bowman, Fed Williams, Fed Kugler, and Fed Jerome Powell, and I have the headlines for you. Fed Kugler says uncertainty is difficult for all parts of the economy. Fed Kugler says there is a high level of uncertainty around tariffs. Fed Kugler says it is possible that we'll see more persistent inflation due to policies. Fed Kugler says, I am paying a lot of attention to inflation expectations. And here, look at that. Fed Kugler says, I don't expect government job cuts to show up suddenly. So kind of what I was just explaining, you could see that come in with a bit of a lag. And Fed Kugler says that he is not worried about a small uptick in the unemployment rate. He says hiring remains above the break-even level, and the February jobs report was a quote-unquote solid number. President Trump today, in response to the jobs report, says, for the first time in 15 months, the job gains for native-born Americans exceeded the job gains for migrant and foreign workers. Employment for native-born workers went up by 284,000, while foreign-born workers went down by 87,000. The Canada Trade Minister says about 40% of products exported to the U.S. are U.S.-Canada-Mexico Free Trade Agreement compliant, which Mexico said almost all of their trade is compliant with this free trade agreement. So Canada looks like they're in a much worse spot than Mexico because Trump said there won't be tariffs on goods that are compliant with the free trade agreement. Now, this headliner from Powell really caught me by surprise today. Fed Powell says the Fed staff is marking up potential growth estimates for now. That potentially the economy is getting stronger. I don't know if that's a ploy to try to save the stock market or whatnot, considering we've been going through some of these growth concerns. But I don't know how you justify that when the Atlanta Fed GDP Now tracker is currently tracking negative 2.4% GDP for Q1. Fed Powell says some factors suggest productivity bursts to be one time. And I think this is one of the headlines that really kickstarted markets today from the lows that we were trading at, down over 1%. Fed Powell says the economy is fine. It doesn't need us to do anything. Again, the growth concerns recently, some of the bad data that we've gotten recently, has put people on edge. And Fed Jerome Powell came out and said the economy's fine. Fed Powell says if this turns into a series of actions, or if tariffs are larger or expectations start to move, that would influence how the Fed reacts. Fed Powell says the labor market is solid, broadly in balance, inflation somewhat above the 2% goal, but moving closer to target. And Fed Jerome Powell kind of throws some of the University of Michigan inflation expectation surveys to the side. He says most longer-term inflation expectations remain stable and consistent with the 2% goal. Now, what's actually interesting about the jobs report today, as Holger here says on X, he says, oops, the U.S. labor market is on recession alert as job market cools with large discrepancies between establishment survey and household survey. Establishment survey showed 151,000 new jobs in February, less than expected. According to the household survey, 588,000 jobs were cut in February, which is why the unemployment rate has risen to 4.1%, although the participation rate has also fallen from 62.6 to 62.4. I mean, you have not seen a discrepancy like this in a long time. I mean, the only other instance was what looks like December of 2023, where you had 700,000 household survey respondents say that they, lost their job. Other than that, you haven't seen a number this negative, in the last couple of years. Fed Jerome Powell says some near-term survey and market measures of inflation expectations have moved up, driven by tariffs. Trump says today, hopefully we can have a peace deal with Ukraine. And Trump says that something's going to happen very soon with Iran. Trump said this about tariffs, quote, there will always be changes. So, that's basically saying expect things to be volatile with tariffs. Trump says that he's expecting good economic data and reports. Goldman Sachs has cut their 2025 US GDP growth forecast to 1.7% versus a prior forecast of 2.2%. Trump also says that India has agreed to cut tariffs, quote, way down. Trump said that we might put more tariffs on Canada either today, Monday, or Tuesday. And that is what did send markets down a bit in the first half of trading. And Trump says we will shrink the government and grow the private sector. Fed Williams said today, I still think the neutral rate is lower than in the 1990s. And it's also being reported that Putin is said to be ready to agree to Ukraine truce with conditions. Trump trade advisor Navarro said this about reciprocal tariffs, quote, one number for each country. Reciprocal tariffs will focus on one tariff rate for each country to reflect tariff and non-tariff measures. And Navarro says the Trump administration will bring positive supply shocks, which implies it will be good for inflation. Fed Bowman today says labor market and economic activity will become a larger factor in U.S. central bank policy discussions going forward. Fed Bowman says shocks and structural changes since the COVID-19 pandemic may have masked transmission of Fed policy to the economy. U.S. economic advisor Hassett says, quote, we will see a bigger hit on government employment in the next reports. So yeah, jobs reports in the next couple of months could look pretty ugly. Mexico's President Sheinbaum says we shouldn't face reciprocal tariffs in April. The CNN Fear and Greed Index today is sitting at 19. Yesterday, it was at 17. So a little bit of a recovery, but still in extreme fear territory. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility, extreme fear. Safe haven demand, extreme fear. Junk bond demand, in extreme greed. You can also see the percent of stocks trading above their 50-day moving average, up 1% today. So almost 31% of stocks are now trading above their 50-day moving average. I mean, that's a good start, but you're at very low levels still. And I mean, markets are still overall pretty damn negative. You could see this as well in the AI investor sentiment survey, where bullish investors actually fell from last week. Now, last week was the highest reading of bears you have seen since the bottom of the 2022 bear market. Okay, normally when you have 60+% of investors that say they're bearish over the next 6 months, the S&P is typically down 25% or so, right? I think it's technically 27%. So this is a pretty rare occurrence where people are this bearish as markets have only fallen a little bit. Okay, now yesterday's report showed 57.1% of people that are bearish, 23.6% that are neutral, and bullish investors at 19.3%. That is down from 19.4% in the previous week. Again, you gotta buy something here. Even if we do fall further, you know, as long as we don't have a recession, I think a lot of bad news could start being priced in, especially in your high momentum areas, stocks that have done poorly, because it's really just a balancing act, okay? You're never going to go all in this market at exactly the bottom. It's about saying, what are the odds of a larger slowdown or a deeper crash in markets? I mean, there's good odds of that throughout this year, but there's also a chance that you may never see Tesla in the 260s again, or you may not see Palantir in the 80s for a long time, or, you know, other similar stocks that have gotten beaten down. And this is the fastest sell-off you've seen in markets in, you know, a long time. I believe since the COVID crash, you have not fallen this fast. S&P's down about 7.8% until we get economic data that, continues to get worse or looks like we're heading into a recession. This could be a short-term bottom. You've been finding a lot of support around the 200-day moving average. Today, you fell below this 200-day moving average, and then buyers stepped in and bought the markets, right? Bought the markets up, and it looks like you're going to close near the high of the day today. That's a good structural and technical sign for a little bit of a recovery, but I don't know how sustainable it will be. You will probably get a lot of resistance around that 590 level. I wouldn't be surprised if you chop sideways for a bit, and then fall to lower lows as the economy does weaken and recession fears rise, which I do think that will happen at some point. I just don't know when, and between now and then, you could see a bounce in markets. And the Treasury Secretary, Scott Bessent, says that the economy could be starting to roll a little bit. He says, quote, could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. What the hell? I've said this literally. I've said these literal same words. I've referred to this economy as an alcoholic, right? In regards to government spending, that for a short period in time, that could be a year, that could be a year and a half, something like that. There's going to be a transition period where we go through withdrawal and the economy, looks bad for a period. And that's literally what Scott Bessent just said as well. And that's why I'm hesitant to say that, the ultimate lows are in for 2025. Because if things do get worse with the economy, sure, the Fed's going to cut, rates are going to fall. But that's not going to be great for stocks. And it's kind of wild because if we hold these levels into the end of the day, the SPY's already bounced 2% from the lows of the day today. So that's where things just are super weird and volatile. You've technically bounced 2% already on the SPY. And you're only up 0.79% of the time of recording this video. So a small green day is actually a 2% bounce when you consider the lows of the day. It's kind of wild. Nonetheless, here on the day today, the Dow is up 0.72%, S&P up 0.75%, NASDAQ up 0.9%, Russell 2000 up 0.34%. The VIX is only down about 5%, so there's still quite a bit of fear out there. People are not rushing to get rid of their puts, so that's kind of alarming. And one other thing that I will say here is you've really not seen the panic spike in the VIX. You haven't seen that capitulation yet in the VIX, where normally you do before a correction ends, which leaves me a little hesitant, again, to say the bottom is in without seeing that capitulation moment. And again, the bottom, is a short-term bottom. It is a bounce, not that, we're not going to go lower this year. Normally, you see in a moment of fear, and you really haven't seen that yet. You've just seen the VIX slowly work its way higher. Now, Treasury yields today are moving up about 4 basis points. Oil is up 1.27% today. Gold is down around 0.5%. And cryptos are generally lower, like Bitcoin down almost 1%. Let me know what you think about this information down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.